The grain, oilseed, cotton, and livestock markets were busy sending signals about what to expect from the next Trump presidency. We'll break it down after the higher close in corn, mixed closes in the soy complex and wheat market, solid gains in livestock, lower closing cotton and class 3 milk, sharp rallies in equity, sharp rally in the dollar, and lower trade in crude oil.
Live, moving on via Farm Journal broadcast. This is AgriTalk. This afternoon, it's a conversation with Terry Linn from the Linn Group. Directly following the news, Todd Bubba Horwitz from BubbaTrading.com. I'm handsome newsman Davis Michelson, and now the host of AgriTalk, Chip Flory.
All right, Davis. Hey, thank you so much. Welcome to AgriTalk, everyone. Glad that you're joining us on this day after Election Day 2024. Ooh. President Trump, our 45th and soon to be our 47th president of the United States. Wow. What a night. What a night. And what a day of market response to it. Jeez.
Indeed. And for all of our concerns about how long may it take us to actually figure out who the president is, reports are surfacing that Madam Vice President has been in touch with Mr. Trump, and they've had the concession conversation, and she's due to speak in a little less than an hour here, as I understand it, Chip.
Okay. All right. Very good. Yeah, she's doing that at Brown University, I think.
Is it Howard? Howard, I think.
Howard University. Yeah. Yes, I'm sorry. Yes, of course.
Yep.
Okay. Equities trade went nuts. The Dow is like 1475 higher. That's a little more than a 3.5% gain in one day. NASDAQ up 530, like 2.9, I think was the number that I saw on that, a 2.9% gain there. S&P 500 up 140, 3.4%. These are massive moves that we are seeing in equities trade. We're going to talk to Terry Linn about equities too. This just, the kind of reaction that we're seeing there just smacks of lower regulation, regulatory costs for businesses going forward. A better environment for small business. All of that. Yeah. All of that. So.
Take a gander at gold. Take a gander at gold.
Okay.
Down about 70 points, we're going to call it today.
$70.
The bottom sort of fell offish. Yeah.
Yeah, exactly. I mean, it's really a crazy trade in there. Okay, let's get busy because we got Bubba coming up.
We'll hustle. Wheat futures mixed as traders sorted out a strong rally in the U.S. dollar index following the results of the presidential election. The dollar rallied to the highest level since mid-July and maintained upside momentum late into the session. Russia's wheat export restrictions are sending export demand to competitors, including Ukraine. Egypt was a noted buyer of Ukrainian wheat this week. December soft red winter wheat futures posted an outside trading day with a close above the opening range. December HRW wheat futures 2 3/4 lower at 5.74. December soft red wheat up 3/4 cent to 5.73 1/4. Chip, give us a little wheat commentary. I'm going to check the spring wheat close real quick.
I've got it for you.
You got it?
December spring wheat was down a nickel at 6.05 1/2.
Okay. I switched over to gold and couldn't get back.
Yeah.
December corn opened lower and traded through support at yesterday's low before recovering to trade through resistance at 4.20 and to close at the highest level since October 7. Today was the fourth consecutive higher close in front month corn, and today's high range close suggests a test of resistance at the October 8 high of 4.28 and potentially the fall high at 4.34 1/4. Ethanol production week ended November 1 averaged 1.105 million barrels, up 23,000 barrels from the previous week and 63,000 barrels ahead of the same week last year. Ethanol stocks did increase 249,000 barrels, but they remain manageable at 22.02 million barrels. December corn futures today 7 3/4 cents higher at 4.26 1/4. March corn up 7 cents, 4.39. July corn futures closed at 4.49 1/2. That's up 6 cents, Chip.
Yeah, did you see how the bull spreads worked in that corn trade today? That might be signaling that there's going to be some upfront demand, some additional upfront demand coming to the corn market.
Well, January soybean futures opened lower and traded solidly lower in the overnight session as it became more clear that Donald J. Trump was going to win the presidential election. Talk of another trade war with China encouraged long liquidation and fresh selling in bean futures. Prices then recovered, and January beans posted an outside trading day, but the close was below resistance at yesterday's high. The forecast in Brazil has been low risk for the bean crop, and that is expected to limit buying interest. January soybeans 2 cents higher, 10.03 3/4. March beans unchanged, 10.14 3/4. July beans closed at 10.42, down 1 penny and 1/4. Chip.
December meal today was down $1.10 to $298.40. December bean oil was up 135 points to 46.34.
We'll Chip, December cotton today 26 points lower at 69.69. On your livestocks, boxed beef prices lower this morning. Good movement, though, 86 loads. And after 6 straight lower closes, December fat cattle rejected trade below 185. December fat cattle were up 62 1/2 cents to 185.40. January feeder futures, $1.67 1/2 higher at 244.02 1/2. And December lean hogs gapped slightly lower and opened near session lows and then recovered to close near session highs. December lean hog futures today, $1 higher, 82.12 1/2. Chip.
All right. Thank you very much, Davis. Bubba, ToddHorwitz.com. Or Todd Horwitz, BubbaTrading.com. Good grief. How you doing, buddy?
I'm doing good. It was a good night last night, and the grains acted great because you would have thought they'd have sold off pretty hard, knowing who's going to be in the office and the tariffs and the high dollar and everything else. And yet here they are higher on the day. Look, who could ask for anything more?
Okay, so what is this trifecta for the GOP? What does it mean for the markets?
I mean, listen, I think the markets are in trouble. Obviously, we have a monster rally today, but as I thought before the election, I thought if Harris had won, the markets would just break. And if Trump had won, we'd get a big rally, and then they'd break. The markets are overbought. This is more of a mirage. The economy's in a lot of trouble, as you know. There's a lot of issues out there, and I think this is just a celebration. But eventually, you know, these currencies are getting, the euros are getting clobbered. There's a whole bunch of things going on, and interest rates are going higher, which is not good for home buyers, and it's great for the banks. And if you look at the banks today, they're up huge because they're making a fortune, and if they cut rates again tomorrow, it's not going to be passed on to the consumer. It's going to continue to let the banks make more money.
Okay, because of the short term versus the long term. And I mean, I don't see anything getting in the way of these real interest.
Well, interest
rates going higher.
The Fed lends money.
Yeah.
The Fed's lending money to the banks, right?
Uh-huh.
I'm here.
Yep. Go on.
I'm here. Did you guys lose?
Yes.
I said the Fed is lending money to the banks. The banks don't have to pass on that rate cut. All it's doing is creating more inflation, allowing the government to reset their debt so they can pay lower interest rates later.
No financial panacea here guaranteed, Bubba. That's the message that I'm hearing from you, brother.
That is the message. But the grain markets should look great and cattle's going lower.
Right on. Todd, Bubba Horwitz, thanks, buddy. We'll talk to you again real soon, pal. Be well. Yeah. Okay.
Thanks,
I'm not sure what well Chip dove down to rescue a kitten out of, but we're going to get him out. AgriTalk. We've cleared the schedule for you. Give us a call at 855-482-5524 and join the conversation.
And welcome back to AgriTalk. I'm your host, Chip Flory. Glad that you were with us. Sorry about that at the in the conversation with Bubba. Just a little bit of a technical issue, but we are back, and we are ready to go with this conversation with Terry Linn from the Linn Group. Terry, it is good to talk to you again. How are you?
Hey, Chip, doing fantastic. Thank you for having me. Always great to be here.
Yep. All right. Well, what a week. Just jam-packed full of new signals for the market to absorb, and none of them bigger than the results of the elections yesterday. number one, I'm a little surprised that we've got the results already, and we've got results that everyone seems to be comfortable with. I don't know if that's the right word or not. We're not going to argue about the outcome of this one. What do you make of today's Trump trade? Is it a one-day wonder? Is it starting new trends? What?
Well, it was a anticipated initial bear response. I think that was a safe assumption that if Trump was going to come away the victor here, the anticipation that you would have at least an initial downside move. But the markets are rightfully concerned about tariffs and the resumption of a trade war, among other policy implications. And so that was understandable. And while we very well could see a redux of the trade war where China puts retaliatory tariffs on U.S. beans as the two sides kind of go tit for tat in trade war negotiations. We've been there. We've seen that. But that's not, that's a presumption. And let me play devil's advocate for fun.
Okay.
It may seem like forever ago, but if you recall, the first round of the trade war concluded with a phase one trade agreement. And that was a hard fought victory, man. And for whatever reason, it was not enforced during the current administration. So who's to say this phase one trade agreement can't be dusted off and ag purchase commitments renewed as part of a new negotiation? China's economy sure is less equipped today to last in a renewed punitive trade dispute. And so, the price action today, certainly you understand why it's a little bit defensive, but maybe just getting the cart ahead of the horse a little bit with some early panic selling. So the market was able to kind of recover. I think we got some short covering as came off our lows a little bit. And, we'll see what things look like come January when the Trump administration resumes control. But it's between now and then, we've got a ways to go. And in the meantime, soybean demand, corn demand, both pretty good. And I think that's a big reason why the markets reacted the way they did and disregarded the dollar and disregarded some of the longer term concerns.
Okay. Terry, wouldn't that be something if President Xi has a knock on the door and it's Trump and he says, "Hey, me again. Let's go back to those trade agreements. We made it almost to the end of phase one, but there's a phase two in here too that needs to be, do we bring that up again and continue the ag trade agreement that was part of phase two? I'm going to have to dust it off and see what was in phase two, to be honest with you.
Yeah, and I'm not saying that I know everything about those negotiations and that agreement, but I'm just painting a scenario that maybe the presumption that this is a big bear event is not going to come to fruition. There's other reasons to have a bearish slant for soybeans on a medium to longer term basis, regardless of trade war or not. But the trade may not be all bad.
Okay. All right, the way that the bull spreads work today in the corn market, well, in the bean market too, but boy, it sure looked to me like the market was saying, okay, we know that there's going to be some additional business done between now and Inauguration Day. Is that kind of the read that you got?
Yeah, we still have, as far as Chinese demand goes, they've got uncovered needs that have to be filled, and we are at the moment the guy to sell them those beans. So I don't think that just because Trump won the election that the selling of beans to China is going to stop. That may happen down the road as we get into a trade war potentially. But also keep in mind, Brazil didn't get any beans planted in September. So we've got a longer window of export, seasonal exports than we would otherwise. That's going to extend deeper into the new year. So there's still business to be done here.
Okay. All right. Staying on the Trump trade here for a little bit. The equities reaction. Why? Why are we seeing such a huge reaction in stocks?
Mm-hmm. I think it's enthusiasm for a change in policy that's more business friendly, more common sense economically. and focusing on things that are different than the current administration has focused on.
Okay. Yeah. Kind of a lower regulation environment. Is that why the markets might be reacting?
And we've seen the first act of this with the first Trump administration, and cutting regulations and cutting taxes for businesses, and a tax cut for individuals as well. And so these are all pro-economic policies that are kind of the backbone of the support for Trump and that whole movement.
Okay, so taking into consideration what happened today, and it just seems so weird that we've got the Federal Open Market Committee meeting starting today. It'll wrap up tomorrow with another decision on interest rates. Does this change anything to expect from what the Fed is going to do?
That's a good question. I think my response would be no, that the Fed kind of has its course set for the most part right now. Will it change with the new administration? Well, Trump will probably be arguing for rates to be lowered, but I think we've got larger issues underlying in our economy that is going to kind of force the Fed to tap the brakes a little bit here, because we've got issues that have not been resolved yet. Even though we've seen those official inflation scores come down, you can clearly look around other parts of the economy and going to the grocery store, for example, and see that the printing of all those trillions of dollars are going to have long-lasting implications that have not been resolved.
Yeah. And food prices turned into a bigger campaign issue late in the process. Trump says he's going to tackle that by lowering fuel prices. I don't know if we saw a lot of reaction in the markets today to that or not, but the energies, I would think, are trying to figure out what comes next under the Trump administration, right?
Yes, and that can be a complicated conversation, but I think in basics, with the pro-energy policies that he's expected to bring, as well as maybe cooling off some of the global war premium that we have in these markets as well, would help to do that. Okay.
All right. Do you think that works? I mean, are consumers satisfied if we can get fuel prices down and maybe, I don't know, does that trickle all the way to the grocery store and start to pull some prices back?
It probably should, I would think, but it may take some time for that to happen. But I would think there's a ripple effect that, all the way down the supply line, that the cost of processing and shipping commodities remains elevated.
Okay, one last election issue in this segment, and then we're going to move on, Terry. Biofuels. What should the stakeholders in the biofuels markets be thinking about?
Well, there's currently a lot of uncertainty over the U.S. policy here that is set to. There was a decision to be made for the start of the new year that has not been decided, at least publicly, yet. So that has created uncertainty in our bean oil futures that at times it shows up in the headlines and has led to a loss of confidence. But we have a global biofuel demand story that is real. A lot of countries are increasing their blend rates. So demand is up, supplies are tightening. And then on top of it here, we've got Malaysian palm oil that has raced out to a premium to soybean oil, market to market on a pound for pound basis that is very unusual. And so what that's done is steered some export demand our way that otherwise we haven't seen here in the past couple of years.
Gotcha. Good stuff, man. Okay. Thank you for that. Now, when we come back, Terry, what I want to jump into is let's get ready for Friday's crop production and supply and demand report. We'll get your thoughts on where these markets might be going and what farmers ought to be doing with their risk management next here on AgriTalk.
Let's go to the markets page at profarmer.com and check today's closes, where December hard red winter wheat futures were 2 3/4 cents lower at $5.74. December SOW wheat up 3/4 of 1 cent to $5.73 1/4. December corn futures were 7 3/4 cents higher today, $4.26 1/4. March corn up 7 cents to $4.39. January soybean futures 2 cents higher at $10.03 3/4. March beans unchanged at $10.14 3/4. December cotton today was 26 points lower at $69.69. On your livestock, December fat cattle up 62 1/2 to $185.40. January feeder futures $1.67 1/2 higher at $244.02 1/2. And December lean hog futures a buck higher at $82.12 1/2. Get more. Visit tryprofarmer.com. Opinions expressed on AgriTalk do not necessarily reflect the views of Farm Journal Broadcasting, affiliate stations, or sponsors. In the morning, you're coffeeed up and you're thinking. In the afternoon, you've calmed down, but you're still thinking. We're here all day. AgriTalk.
Welcome back to AgriTalk. I'm Chip. Glad you're with us. Dow's up 1525 now, 3.61%. That is a big, big move, no doubt about it. We talked about where the grains closed earlier, and we are in the middle of a conversation with Terry Linn from the Linn Group. Terry, did we miss anything? What else are you and the guys talking about around this election?
Well, I think what we have seen is that there's been a lot of stand back and getting away from the markets a little bit due to the uncertainty. Okay. And so it would be good to see if we get some better participation now that we've taken one of these big unknowns off the board. We still have to get through the Fed tomorrow. We've got to get through the crop report on Friday. But we've had these big unknowns kind of sitting out there that have just kind of created a little bit of an uncertain environment for trading and handling risk management.
Okay. Yep. So Fed cuts rates 1/4 point now. Do they stay on a path of lower interest rates, do you think, into December?
Well, that depends, I guess, on what the reaction you get in terms of the economic data that follows. I think that there was some consternation following the 1/2 point rate cut, and we saw the reaction of the dollar after that with a significant rally. So we'll see what happens after what is assumed to be a 1/4 rate cut tomorrow. And I think they're going to be watching those data points very closely to see what happens as we go forward here. But there's a risk, and we've seen this in history, that if you start to cut rates before the economy is ready, inflation can come roaring right back. And so that's the real risk here.
Yeah, no doubt. No doubt. I just called up the dollar index chart, 6-month dollar index chart, and put it in front of me. Man, oh man, we're not all that far from the highs that we posted the end of June up there in that 106, 106.05 area. Does the dollar keep going on us?
That's a good question. What really I found interesting today was that the currencies that typically go in opposite directions, for example, the Brazilian real, also had a sharp rally today, which is highly unusual to see it going the same direction as the dollar. So that to me is a little bit of a red flag as far as maybe the dollar having more of a near-term, short-term reaction that maybe is not the beginning of a significant move higher. But technically, you look at what we did here today with the big gap up right up to the highs, you certainly have a constructive chart posture to work with. If it's going to do that, it certainly has the technical potential, but the difference with the divergence in the currencies was an interesting dichotomy here today. Yeah, no doubt. Okay, what have you been hearing from
farmers that you're working with? Is it pointing the corn yield or the soybean yield up or down from what we had in October?
Well, that's a really good question. There's the old adage that big crops get bigger, but we just had a really dry finish to the growing season this year, which, based on the corn and the bean crops, would respond to that a little bit differently, a little bit more negative reaction to beans reaching their yield potential than corn. And that's some of the feedback that we get, that there was a lot of record crops out there, but there was also a lot of disappointment. I think that we had this great potential, and then we got into August and September, and the spigot just shut off, and so didn't quite attain that in a lot of cases. So it'll be interesting to see what the USDA does here tomorrow. The trade's not expecting any major adjustments, just kind of a few ticks on the bean yield and one tick on the corn yield is the average guess. So there's room for surprise because the market maybe is a little bit complacent there. But I don't have any data that suggests that we're going to end up meaningfully away from where the USDA is today.
Okay. All right. So no major changes on the supply side of those balance sheets to move the needle. Can we see anything on the demand side? Start with corn. I think we should separate them now. Start with corn. Anything there that might move that corn carryover?
Yeah, I think it's very easy to point to the export sales that we've had so far in this new marketing year, really exceeding expectations. We've got export sales and commitments basically that are running 41% ahead of this time a year ago, and that reflects cheaper prices. Also reflects some loss of feed grain production in other parts of the world that you had some issues. And so kind of all the ingredients are right to have a good year for export demand, and we're seeing that out of the gates. Okay.
So carryover expectations, what are you thinking? Down from that $1.999 billion?
Yeah, on our internal balance sheets here, we can argue a 1.8. Some guys will argue closer to a 1.7. So we think we're coming down, and yes, a big reason for that is that demand is really good, and we'll see what the USDA does with their yield. Yield for corn, wouldn't be surprised if it came down a little bit. So yeah, I think the balance sheet's a little bit more snug than where the USDA is today.
Okay, so a 1.7 to 1.8, 1.7 billion to 1.8 billion bushel corn carryover. What does that do to your price outlook?
Well, the crazy thing is, we've got a 15.1 or so billion bushel crop, and our carryout is basically unchanged from a year ago. And that's just a testament to how strong the demand is. The futures priced in the supply side of things. We made a low in August. I think that looks like a good low. And now we've kind of, we've kind of turned sideways here on strength. There's plenty of supply up there to kind of limit the upside. But we've also been seeing the floor kind of rising here in the corn market, from that 385 type of low to the $4 support level. And here last week, we found that 410 is offering a support underneath the market. And so I think that we'll have challenges getting the market too excited to the upside. But at the moment, we've got basis strength helping us. We've got spread strength that's helping the futures. We've seen the fund short position cleaned up by quite a bit, so you don't have that type of fuel. But I think that we're settling into more of a sideways corn market here as we move forward.
Yeah, Terry, you said it on basis. I'm still really impressed with how the basis is trading. We got river problems. We just dumped a brand new crop on top of the market. And basis just hasn't wanted to break much. What's going on there?
Yeah, we've really absorbed the crop very well. You've got harvest that's moving past 90% at this point. And so, you had a lot for sale initially. You got bills to pay. You've got fall fertilizer bills to pay. But now what's happening is you've got a farmer that has put the rest of his crop away, locked the bin, and you've got to motivate him to move that out of there. And for tax reasons, maybe he's going to be pretty difficult to get along with. He probably wants to defer some of that income into next year, where the margins are not expected to be great. And so I think that's part of what's into the basis right now, is that you've got end user markets with margins that they need the corn, and the price to source those bushels is moving higher.
Okay. All right. Demand side of the bean chart. Is there room for movement to make a difference?
Well, the bean conversation is very different than the corn conversation. We have very good demand nearby. We've got record crush demand that's expected to continue, with the caveat that we've got some uncertainty surrounding the biofuel and the government policy there, what's going to happen. But we've got the export program that seasonally is on a clock. And again, we don't know what's going to happen with trade here, but we're kind of, you get past the new year, January, maybe a little bit into February, and your sales seasonally just kind of fall off. So the demand side of things for beans, I think for our domestic balance sheet, where if you want to argue a 530 or a 550 million bushel carryout, okay, but I think we kind of priced that in with the futures with what we've done at the moment.
Yep.
But the hammer is going to fall with the Southern Hemisphere crop. The USDA is currently forecasting year over year production globally to increase by 34 million tons, and ending stocks to increase by 22 million metric tons. So we are going to absolutely swamp the global balance sheet here. And trade war or not, with that type of supply, bean prices don't need another excuse to move lower. So over time, the risk is very much skewed to the downside in the soybean market, unless you encounter a weather issue in the Southern Hemisphere, which today we do not have.
Yeah. Okay. Real quick, price outlook. It sounds like you want to be fairly aggressive on bean pricing.
Yes. With corn, I'm a little bit more hands off. If we get opportunities, selling strength, okay, that's great. I think we could be two-sided. You could have opportunities to take on both sides of the market for the producer, obviously lining up from the short side first. But with the bean side of things, I think what we've been seeing here over the past month or so is that rallies are very much a struggle in anticipation of this Southern Hemisphere crop. And over time here, the downside risk is going to expand.
Yep. It's that it is that time of the year, and you've helped me remember that, Terry, that we got to keep an eye on what that supply is going to be coming out of South America. Good stuff, man. Thank you so much. I appreciate you.
Great. Thank you, Chip.
You bet. Terry Linn, the Linn Group. Davis and I will be right back to wrap up AgriTalk.
You're listening to AgriTalk, where the conversation begins. Join us at 855-4-TALK-AG. Sigh of relief, everyone.
Yeah.
Welcome back to AgriTalk, everybody. It's me, Davis Michelson, your pal, along with our beloved host, Chip Flory.
Yes.
I asked you
Dow's
specifically.
Up 1550.
I asked you specifically not to say a number, and now you've said it a second time. 15.
Okay.
Don't be getting me started on the 15 with the.
Yeah, I got you. I'm sorry.
Yeah.
1550. Yep. Oh, she's getting ready. The crowd is gathering at Howard University.
All right.
For Vice President Harris.
Yeah.
So it's
What do you make of the fact that she kind of ghosted the crowd at the end of the night last night? Part of me, and it's not necessarily a part of me that I encourage in my personality, but part of me gets it. Like, that was a tough road. Now you got to get up there and say, well, I came in super hot and now it's not.
It was like 110 days. It was like 110 days ago that she said, "Wait, what? Yeah. I'm at the top of the ticket." Yeah. No, I get it, but I will also say that there were many, many, many things that she could have done along the way that would have made it easier for her to get on stage and say, listen, we gave it everything we had. Because, I mean, we still don't know exactly what her plans for different policies or different issues. We don't know what the plans were. Yeah. If she would have, quote unquote, given it all she had, she would have been laying out, a 10-point plan to get rid of inflation and rebuild jobs and stuff like, that she just didn't do it.
Well, and kind of the idea that it sort of goes back to maybe what you and Terry were talking about, Terry Linn from the Linn Group, about, I'm sure that you can have some impact on the price of consumer goods if you can lower the price of fuel. That's one of the things that we keep saying. It's not because the grocers are digging in for more profits. It's because it's more expensive for them to put the stuff on the shelf. Well, one of those components is gasoline and diesel fuel. That makes a lot of sense to me. There's something that you can hang your hat on. Oh, okay. That's at least a specific idea. You know what I mean?
That sounds like a plan. Whereas,
and I do,
the price gouging plan that that Harris said she would pursue. Now listen. I'm not saying that there aren't maybe some companies that have decided that they were that they just jacked up the price because they figured out what the market would bear for whatever it is that they are producing. Okay?
They are, yes. They're out there.
But you can't aim this price gouging at for the most part, you can't aim it at the grocery stores. And that's what she was doing. Yeah. That doesn't make any sense.
And you know what else I feel like was and I don't want us to turn this into a whole, just a redux of the whole thing. But put one thing that I've learned, okay? Sing your song. Just put the song out there. Don't get all in your head about who's going to like it. What if I don't sing good? What if I don't play good? Forget all that. Just put your message out there rather than, seems like we're polling a little less in this group. We need to rush over to this, demographic. Oh, now suddenly we need to court this demographic. And you spend so much time trying to make that person happy, and then that person's not happy, so now you got to go over here. Just put your message out there. Just sing the song. You know what I mean? And I feel like that might have been advice that she could have used. Sing the song.
Yeah, well, we certainly know which candidate did put his message out there, and in your very well put words, sang his song.
He sang his greatest hits, is what he did. A double album.
He even did a couple. I think he even did a couple of Van Halen covers in there, didn't he?
There were some covers in there. You bet. The YMCA, why not?
Oh, my gosh.
But I think you're exactly right. I think she may have done a little bit better if she was just a little bit more clear about the plan.
Yeah.
I don't know.
I don't know. And then I will say this. I will add on this, because there's a couple of guys out there that all of a sudden I can see their face, and they are telling me she would have put her plan out there if she had one.
Oh, yeah.
Well,
and the other important thing, and you unfortunately popped off, I assumed it was to dive into a well to save a kitten when we were talking to Bubba. Glad you made it out, by the way. But where we ended with Bubba was, okay, we've got a trifecta here. But Bubba says, they're still headed lower. This is no panacea. Bubba and I ended up with, so if you're telling me, Todd, I'm hearing you say this is no panacea here. And he's like, that's exactly right. There's no panacea here.
Yeah, that is exactly right. Although, and I'm sure that we will get into this on Friday, the makeup of the Senate is going to be really, really interesting on what it might mean for efforts to remove regulations, efforts on taxes. There's a little more wiggle room in the Senate now than what I thought there was going to be. The moderates in the Senate that I thought were going to have, the ultimate say on what's going to happen there. Maybe not. Maybe not. We've got we've got a couple of races yet to determine there. We'll see if they're done by Friday. So we get into the free-for-all. National Weather Service 6 to 10-day outlook November 12th through the 16th. Above normal temperatures across the Corn Belt, above normal precipitation. 8 to 14-day November 14 through the 20th. Above normal temperatures, above normal precipitation across the entire Corn Belt. Man, oh man, what a day. What a day, what a day, what a day. Thank you so much for spending parts of it with me and Davis and Big Apple Joe. Come back tomorrow morning, 10:06 Central. We'll have more AgriTalk coming your way.